from South India. As you all already know, Akash Agarwal Classes has launched for you all 100% English lectures in English for CMA Foundation students giving their examination in December 2025 and onwards. So here I am going to tell you how do you enroll in the batch. You just have to join our WhatsApp community, which is given in the link. Fill up the Google form again given in the link, and to download our mobile application Akash Agarwal Classes to access the notes. You all know the lectures which we are going to conduct will be 100% covered. There would be no subject which we are not taking care of. So we are going to take care of each and every subject, each and every concept. We are going to take MCQs for you. We are going to provide test papers. We are going to take live mentee sessions as well. Lectures which we are going to take for you all are 100% recorded lectures and not dubbed lectures. And you all know we have exclusive team ready for you all to teach you for your CMA Foundation December 2025 attempt for subject wise as well. And we are uploading the lectures on a weekly basis. All the important links which will be useful to you all are uploaded in the description box. Since we have many students who have cleared CMA examination at all the levels from Akash Agarwal Classes, and to reciprocate the love which we have received from South Indian students, we are here for you all taking lectures 100% in English, so that we can clear your CMA Foundation December 25 attempt together. So keep studying, do watch all the lectures till the end, and do show some love by liking the video, subscribing to the channel, and putting up a word in the comment box. Keep studying. Bye-bye.
Hello my dear CMA Foundation students. In the today's session we will be covering the topic of joint venture. First of all, if any of the student is watching this lecture for the first time, kindly join the WhatsApp community that is available in the description box. It will be definitely helping you to clear your exams. So today we'll be covering the topic of joint venture. This topic has been asked in the exam for approximately 4 marks. Very simple topic, not a difficult topic. What do you mean by joint venture? Joint venture is a type of partnership. Joint venture is a type of what? Partnership. It is known as temporary partnership. Joint venture is a type of partnership and it is known as temporary partnership. Sir, can you explain it in detail? Yes. What happened many times, many businesses required high investment and required a high risk. So it cannot be do for a long-term purpose. So many times, many people make a joint venture that is a temporary partnership. It is for the limited purpose, and once the purpose is over, the partnership has been dissolved. Joint venture is a short-term business undertaking jointly by 2 or more persons. Basically, in this part, you will be requiring 2 or more persons who share the profit and losses in the agreed ratio. Joint venture is a temporary form of business organization. It is not going concern. We have studied what is going concern. Joint venture is not going concern. It is temporary part. It is which part? Temporary part. It is not long term. It is short term. Joint venture is a temporary form of business organization. There are certain business activities or projects that may involve higher risk, higher investments, and even they demand multiple skills. In such person, an individual person may not be able to master all resources. It won't be possible for me. So if in a business there is a higher risk, higher investment, and they also demand multiple skills, so at that time we will be preparing what? Joint venture. Because there are certain business activity or projects that involve higher risk and higher the amount of investment, as well as they demand what? Multiple skills. In such case, an individual person will not be able to master all resources. That is the reason why people entered into joint venture. It is type of partnership. It is type of partnership, but it is known as temporary partnership. It is known as temporary partnership, or we can tell it as limited duration partnership over here. Hence, 2 or more people having requisite skill, sets come together to form a temporary partnership between both the parties, because for partnership there is an act known as Indian Partnership Act 1932 which govern partnership. How many members were there? The partners are, what are the rights of the partners, what are the duties of the partners, how there will be profit sharing ratio. But in case of this, there is no specific act for joint venture. Again, a point of MCQ. There is no specific act for joint venture. There is a memorandum of undertaking, that MOU, signed for the purpose. A MOU is signed between the members of the joint venture. The business activities for which joint venture are formed, it can be seasonal business. You are doing seasonal business. For example, in the season of Diwali, you will be selling firecrackers. In the seasons of basically Makar Sankranti, you will be selling kites. This is seasonal business. Construction of dam, bridges, roads, buying and selling of goods for a particular season, producing a film, purchasing land and selling plots. You are not builder, but you have purchased a plot with some another party and you have basically selling the plots. So it is not your main business, but you are doing the same for a temporary period. It is known as joint venture. So there are many activities of joint venture for which a JV can be formed. JV means it is a temporary partnership. It is not long-term duration. The partners will be, the members will be sharing the profit in the agreed ratio. There are some features of joint venture. The first feature is it is done for which purpose, specific purpose, and hence has a limited duration. First important point, the features of joint venture are it is done for specific purpose and hence it has a limited duration. The partners are called as co-venturers. The members who work in the joint venture are known as co-venturer. The profit or loss on joint venture is shared between the co-venturers in the agreed ratio. If the ratio is not mentioned between the co-venturers, very important. In partnership, whenever partnership form, the members who work are known as partners. Over here, they are known as co-venturers. The members who work in joint venture are known as co-venturer. The profit or loss on joint venture is shared between the co-venturers in the agreed ratio. The co-venturers may or may not contribute initial capital. Very important point. The co-venturers may or may not contribute initial capital. But whenever in case of partnership you have to contribute a capital, then only you can be admitted as a partner. Or you are not contributing capital, you have to contribute something other like asset or goodwill. So the co-venturers may or may not contribute initial capital. In joint venture, the members who work may or may not contribute initial capital. The joint venture is dissolved once the purpose of the business is over. If, for example, you and me have started a business, Mr. A and Mr. C. A and B both entered into a MOU, memorandum of undertaking, for selling umbrellas. You and me started the business of umbrella. For 3 months in the rainy season, we have sell the umbrellas. After 3 months, we have shut down the business. So JV is dissolved, because once the purpose of the business is over, it will be what? Dissolved. So it is known as a joint venture. The accounts of co-venturer are settled immediately on dissolution. It means that when we have completed the purpose of selling umbrella, the account will be immediately settled. Account will be immediately settled. It means that the amount of profit will be distributed between the co-venturers in the agreed ratio. Once the amount is distributed between the co-venturers, then A and B will be taking their money from the business and business will be dissolved. A joint venture has no name or no specific act. A joint venture has no name or no specific act. These are the features of joint venture. The first one is it is done for specific purpose and has a limited duration. The members who work are known as co-venturers. The profit or loss will be shared in the agreed ratio. If the agreed ratio is not given, it will be shared equally. The co-venturers may or may not contribute initial capital. Once the purpose of the joint venture is dissolved, the business is over. The accounts are settled immediately once the business is dissolved. A joint venture has no name, it has no specific act. Just like partnership, it has no specific act. Sir, there is a difference between joint venture and consignment? Yes, there is a difference between joint venture and consignment. The first difference is the relation here in case of joint venture is of the owner, and in case of consignment it is of principal and agent. And I will be telling how many methods of accounting are there in joint venture. There are multiple methods of recording in joint venture, but in case of consignment there is only one method of keeping records. Just give me a second. Yes, so we have read the difference between joint venture and consignment. The basic two difference are, in joint venture the members who work are known as owners, and in consignment there is a relationship between principal and agent. In joint venture there are multiple methods of bookkeeping, and in consignment there is only one method of keeping books of accounts. Ownership of goods is of the co-venturers, and here the ownership remains with the consignor. Profit earned here belongs to the co-venturer, and over there profit is the whole credit of the consignor, and consignee will be only and only entitled for the what? Commission. Management. Co-venturers enjoys the full power of manage the business. The consignee, being an agent, has no powers except that he has simple to obey the instruction of the principal. It means that how the principal tells, in that manner the consignee has to do the work. Finance. Money is contributed by all the co-venturers. Just give me a second. Yes. Money is contributed by all co-venturers in a certain proportion. All money is invested by the consignor. Over in case of consignment, the whole and sole responsibility of the consignor. Risk is shared between the co-venturers. Here the risk is with the consignors. So this is the basic difference between joint venture and consignment. And there is a difference of one more thing. Joint venture and partnership. Joint venture carries without a firm name, and partnerships carries with a firm name. Here the parties are called as co-venturers. Here the parties are called as partners. It is a temporary partnership, continuous and does not end after the completion and does not end after the completion of particular venture. Partnership is a going concern, and joint venture is a temporary partnership, and once the purpose is over it comes to an end after the completion of particular venture. Here the liability is limited, as the business is for short term, therefore the liability is limited, and over here in case of partnership the liability is unlimited. Partners private assets will also be liable. Location of business is generally local. It may be located at which places? Different places. Position of minor. In the minor is generally not admitted. A minor can be admitted only for the benefits. No act is available for joint venture, but Indian Partnership 1932, Indian Partnership Act 1932 is applicable for partnership. Number of partners or members, there is no limit. It is limited to 20 in case of banking business, and in non-banking business it is in 20 in non-banking business and 10 in banking business. Partnership, there are certain rules as per Indian Partnership Act 1932. So over here, this is the basic difference between joint venture and consignment, and joint venture and partnership. So let's go ahead. Accounting for joint venture. First of all, there are basically two methods. The first method is when separate set of books are maintained. First one is what? When separate set of books of accounts are maintained. It means that the books of joint venture is different, and the books of co-venturers personal books are different. Joint venture books of accounts are different, and co-venturers personal books of accounts are different. Over here, three accounts will be maintained. First will be the joint venture account. It is of the nature of nominal. It is just like your P&L account. It is just like your P&L account. It will be helping you to find out the profit or loss. Second will be joint bank account. It will be account of personal nature. It will be recording all cash and bank transactions of joint venture. It means that any of the transaction of cash and bank will be recorded in joint bank account. And last one will be the co-venturers. Co-venture is the personal account of the members who are working in the joint venture. So in case of separate set of books of accounts are maintained, total three accounts will be maintained. First one will be joint venture, second one will be joint bank, and third will be co-venture. Joint bank is a nominal account, joint bank is a personal account, and co-venturers is also a personal account. All this point can be asked as an MCQ. Yes. So three accounts will be maintained in case of separate set of books of accounts are maintained. First will be joint venture, second will be joint bank, and third will be co-venturers. Joint venture will be a nominal account, joint bank will be a personal account, and co-venturer will be a personal account. Joint venture account is similar to your profit or loss account. It will be helping to find out the profit and loss of the joint venture. Any of the nominal account, if involved in an entry, will be substituted by JV account. Any of the nominal account included in the joint venture will be substituted by JV account. It means that if there is an expense, it will be substituted by JV. For example, contribution of co-venturers. When the owners contribute money in the business, so what is the entry? Cash comes in. So cash is a real account. Debit what comes in, credit what goes out. So the entry will be normally cash account debit to co-venturers because they are giving the money. So debit the receiver, credit the giver. So what is the entry? Joint cash account debit to co-venturers. Instead of cash, you will be writing joint bank. So the entry is what? Joint bank account debit to co-venturer. It means that all the cash and bank transaction will be recorded through a single account that is known as joint bank account. If in an entry any cash or bank account is involved, it will be recorded with the which account? Joint bank account. Very, very, very important. Goods sent by the co-venturer out of his own stock. Whenever the goods have been sent by the co-venturer out of his own stock, it will be a purchase for the joint venture. So what is the entry for purchase? Purchase account debit to cash. But we have not paid the cash. Co-venturer supplies the goods. So co-venturer personal account. Debit the receiver, credit the giver. Purchase account debit to co-venturer. Instead of purchase, you will be writing joint venture account. So the entry is what? Joint venture account debit to co-venturer, because all the nominal accounts will be substituted by a single account known as joint venture. Expenses paid by the co-venturer. Expense of joint venture paid by co-venturers. The normal entry for expense is what? Expense account debit to cash. But expenses of which account? Nominal account. So expense, instead of expense we have to write joint venture, and instead of cash, because the expenses have been paid by co-venturer personal account, debit the receiver, credit the giver. So joint venture account debit to co-venturer. Simple, simple. Material purchase out of joint venture fund. You have purchased the materials out of joint venture fund. So the entry will be purchase account debit to cash. But instead of cash, you will be using joint venture account because it is a nominal account, and instead of cash, you will be using joint bank account. Over here, the entry is what? Joint venture account debit to what? Joint bank. I hope so everybody is getting clear with this. For expenses out of joint bank, whenever there are the expenses out of joint bank, so what is the entry for expense? Expense account debit to cash. But instead of expense, what account we will be using? Joint venture. And instead of cash, we will be using joint bank. For goods sold for cash, when you will be selling the goods in cash, cash comes in, cash is the real account. Debit what comes in, credit what goes out. Cash account debit to sales. Instead of cash, we will be using joint bank, and over here, sales to the nominal account, we will be using joint venture account. Contract or sale price received in form of shares or cash. You have received the contract or sale price in form of shares or cash. So you have, it is a type of sales. So shares will be your asset. Debit what comes in, credit what goes out. Shares account debit to sales. Instead of sales, you will be writing joint venture account. And if you are receiving the money in cash, instead of cash, you will be writing joint bank account. Commission or salary to the co-venturer. Commission or salary will be expense for the joint venture. So, commission account debit or salary account debit to co-venturers. To what? Co-venturers. So, here the co-venturers will be same, but commission will be an expense for the joint venture, and expense is a nominal account. Instead of expense, you have to write joint venture account. Unsold goods taken over by the co-venturer. The unsold goods have been taken over by the co-venturer. Whenever the co-venturer will be taking over the unsold goods, co-venturer personal account debit the receiver, credit the giver. Co-venturer account debit. It is a type of sale for us to sales. But instead of sales, you will be writing joint venture. Shares taken over by the co-venturer. Asset of the joint venture taken by the co-venturer. Co-venturer personal account. Debit the receiver, credit the giver. Co-venturer account debit to shares. If the shares are sold in the open market, we have sold these shares. So we will be receiving money, cash real account. Debit what comes in, credit what goes out. Cash account debit to shares. But instead of shares, you will be using joint bank account. For profit on joint venture, whenever there is a profit on joint venture, what entry will be recording? Joint venture account debit to co-venturer. Joint venture account debit to what? Co-venturer. And if there is a loss, because if there is a loss, you will be receiving the money from the co-venturer. Co-venturer account debit to joint venture. And for final distribution of fund, if we are receiving the money, cash will be going out to the co-venturer. So the entry will be co-venturer account debit to cash, but instead of cash, joint bank. This is the very simple first method. I have explained all the 14 entries. If we have to take money from the co-venturers, then the entry will be joint bank account debit to co-venturer. And over here, we have completed the first method. In case of separate set of books of accounts are maintained, total 3 accounts are maintained: joint venture, joint bank, and co-venture. Joint venture is a nominal account, joint bank is a personal account, and co-venture is a personal account. I have also explained all the 14 entries which are required. So kindly read it once. I have also explained the simpler part and how the entry form. I have also given that point also. So the first method has been done. The second method is when no separate set of books of accounts are maintained. In the first case, the joint venture books and owner personal books were maintained separately, but in this case, no separate books of accounts are maintained, and the first one is each co-venturer keep record of all the transaction. Each co-venturers keep record of all the transaction. The first one is joint venture, second one is co-venturer. Here there will be no joint bank account. It is a nominal account. And it is a personal account. I hope so everybody is done with this. The co-venture keep the records of all the transactions. Basically, there are two methods in this method too. When no separate set of books of accounts are maintained, co-venturer records all transactions. Second one is co-venturer record only own transactions. In the first one, co-venturer will record all the transaction. In the second one, co-venturer will record only own transaction. So these are the entries. Co-venturer records all the transaction of JV in the books of A and in the books of B. There are two co-venturer A and B. So when the first transaction goes on, when the goods are supplied and expenses are paid by A, who is supplying the goods? A. Who is paying the expenses? A. So it will be an expense for the joint venture. So purchase or expense will be for joint venture. So joint venture account will be debit, because for expenses it will be debiting the account. 2. Who is supplying the goods? A. A is giving the goods, so the goods are going out. Goods are asset. Debit what comes in, credit what goes out to goods, and he is also paying cash to cash. And the same entry in the books of B will be what? Expense of JV paid by A. So JV account debit. A is a which account? Personal. Debit the receiver, credit the giver. JV account debit to A. Very, very, very simple. The first entry is very, very, very simple. When the goods are supplied and expenses are paid by A. When the goods are supplied by B and expenses are paid by B, here the situation goes reverse. The goods are supplied by B and the expenses are paid by B. So in the books of B, what will be the entry? Joint venture account debit, because it is an expense of JV. Expense account debit or purchase account debit. Instead of that, you have to write JV account. 2. Goods have been supplied by B, or to cash. Cash has been paid by B in the books of B. And over here, joint venture account debit to B, because B is a personal account, debit the receiver, credit the giver. Very, very, very simple. First two entries when the goods are supplied by A and the expenses are paid by A, or the goods are supplied by B and the expenses are paid by B. When advance is given to A or bill accepted by A, advance is given by A to B. A is giving the money to B, or bill is accepted by A. So it will be a liability for what? A. And A is giving the money to what? B. So B is a personal account, debit the receiver, credit the giver. B account debit to cash or to bills payable. And A is receiving the money, B is receiving the money, cash is the real account. Debit what comes in, cash account debit, or bill, he is getting the bill. Bill receivable account debit to A. So B account debit to cash, to bills payable. Cash account debit, bills receivable account debit to A. This is the basic advance given by A to B, or bill accepted by A. When sale proceeds are received by A, sale of joint venture received by A, cash is of which account? Real account. Debit what comes in, credit what goes out. What is the entry for sale? Cash account debit to sales. So instead of sales, you will be writing joint venture, because it is the sales of joint venture and not personal sales. And in the books of B, who has received the money? A. So A account debit to joint venture. A is a personal account, debit the receiver, credit the giver. When sale proceeds are received by B, sale proceeds are received by B, whenever the sale proceeds are received by B, so what entry will be passing in the books of A? B will be receiving the money. B account debit to joint venture. And over here, what entry will be passing? Because money has been received by B, cash account debit to joint venture. For unsold goods taken over by A has taken over the goods. So goods is getting by DA. So goods account debit to joint venture. And who is getting the goods? A is getting the goods. So what entry in the books of B? A account debit to joint venture. Similarly, when the unsold goods have taken over by B, in the books of B, goods account debit to joint venture, and over here B account debit to joint venture. These are the reverse entry. Not very difficult, it is simple over here also. So you have to just run one entry. Just remember one entry, the second entry is the reversal of the same. Nothing more than that over here. Last, the profit on joint venture business. If there is a profit, because here both the parties are recording all the transactions, means that I will be recording transaction of myself as well as yourself. For profit on joint venture business, the entry will be what? Joint venture account debit to B to PNL. And over here, joint venture account debit to A to PNL. I will be recording my profit as well as another co-venture profit. And if there is a loss, so entry will be PNL account debit, B account debit to joint venture, and here A account debit, PNL account debit to joint venture. The profit and loss you have to record in the both parties. I hope so everybody is getting with this point. Joint venture account debit to B to PNL, joint venture account debit to A to PNL. For loss, B account debit, PNL account debit to joint venture, A account debit, PNL account debit to joint venture. Co-venturer records only his own transaction. The last method here, the co-venturer is being selfish, recording only own transaction. It means that I will be recording only my transaction, and you will be recording only your transaction. So it is not possible for a particular co-venturer to find out the correct profit or loss on joint ventures. So that is the reason why only one account is maintained. Yes. So यहाँ पे हमको so let's go ahead. So over here, so co-venturer will be recording only his own transaction. He will be selfish. He will be not recording a transaction of other co-venturer. So the first entry in the books of co-venturer, on receipt of any amount of bill received from any other co-venturer, if we have receiving any amount or any bill from other co-venturers, because in this only one account is maintained, that is joint venture with co-venturer. The name of the account is what? Joint venture and co-venturer, and a temporary account is open. And the temporary account is open. The name of the same is memorandum JV account. The name of the account is what? Memorandum JV account. Joint venture with co-venture account, it is a nature of personal nature, and for this one more account will be temporary account will be open, that is memorandum joint venture account. So over here, on receipt of any amount of bill received from any other co-venturer, the entry will be cash or bank or bill receivable account debit to joint venture with co-venturer. If we are discounted the bank bill from the bank, so the entry will be bank account debit. Discounting entry, you know, for expenses joint venture with co-venturer, debit to bill receivable. Whenever we will be purchasing the goods, we will be purchasing the goods for joint venture, it will be the expense of the joint venture. So the entry will be joint venture with co-venturer account debit to cash. On making payment to the supplier, whenever we will be making the payment to the supplier, the entry will be supplier account debit to cash. On supplying the goods out of the own stock, we have supplied the goods from our own stock to joint venture. So the entry will be joint venture with co-venture, because the expense is of joint venture. So joint venture with co-venture account debit to goods, or we will be deducting it from the purchase. So first four entries are very simple. First, whenever we are receiving some money from another co-venturer, so entry will be cash account debit or bank account debit. If we are receiving bill, so bill receivable account debit to joint venture with co-venturer. On discounting the bill, the entry will be what? Bank account debit, joint venture with co-venture account debit to bill receivable. On purchase of goods, joint venture with co-venture account debit to cash. On making the payment to the supplier, supplier account debit to cash. On supply the goods of its own stock, joint venture with co-venture account debit to goods or purchase. On payment of expenses, expense entry, expense account debit to cash. instead of expense you will be writing joint venture with co-venturer. Simple. On sale of goods you will be receiving the money, cash account debit to sales. Instead of sales, joint venture with co-venturer. Simple. If you are receiving the money from the customer, entry will be cash account debit to customer. When the unsold goods are taken away by the co-venture, it will be purchased from there. So purchase account debit to joint venture with co-venturer, because the goods of the joint venture are taken by the co-venturer. Purchase or goods on considering some commission or salary to the co-venturer. Salary or commission is given to the co-venturer. It will be an income for there. So the entry will be joint venture with co-venturer account debit to commission or salary, because it is an income for the co-venturer and you are recording a transaction in the books of co-venture. Now on recording the profit, you will be recording only your profit. So profit is an income, debit all expenses, credit all income. So the entry will be joint venture with co-venture account debit to P&L. And if it is a loss, P&L account debit to joint venture with co-venture. Very simple. On settlement, if the money is receiving to you, so the entry will be cash account debit to joint venture with co-venturer. And when there is a credit balance, joint venture with co-venturer account debit to cash. So over here, the last method is very simple. Only one account is maintained, joint venture with co-venturer, and for finding out the profit and loss, you will be preparing another account, that is memorandum joint venture. So on receipt of any amount, the entry will be cash or bank account debit to joint venture with co-venture. If discount of bill of exchange is done, then bank account debit, JV with co-venture account debit to bill receivable. On purchase of goods, purchase account debit to cash, but instead of purchase you will be writing joint venture with co-venture. Purchase account debit to cash, but instead of purchase you will be writing joint venture with co-venture of making the payment of the supplier account debit to cash. On supply of goods of the own stock, you are supplying from the own stock, it is purchased from the joint venture. So purchase account debit to goods or purchase, but instead of purchase you will be writing joint venture with co-venturer of payment of expenses, expense account debit to cash, but instead of expense you will be writing joint venture with co-venturer. Sale of goods, cash account debit to sales, but instead of sales you will be writing joint venture with co-venturer. Or receiving a payment from the customer, cash account debit to customer. Or taking away the unsold goods, the entry will be goods or purchase account debit to joint venture with co-venturer. On salary or commission, it is an expense, so joint venture with co-venture account debit to commission or salary. If there is a profit, joint venture with co-venture account debit to P&L. And if there is a loss, P&L account debit to joint venture with co-venturer. And if we receive the money, cash account debit to joint venture with co-venture. And if we are supposed to give the money, joint venture with co-venture account debit to cash. Simple. This is the topic of joint venture. Very simple and very short topic. Not a big topic. Simple topic. Easy to understand. Very simple topic. Now let's go to the MCQs of the same. Just give me a second. Total 30 MCQs are there of joint venture, and then we will be completing the topic of joint venture. Joint venture account is of nature of, it is a nominal account, option number B. I have started with this only. There are two methods. One is separate set of books of accounts are maintained, and another is separate set of books of accounts are not maintained. If it is maintained, 3 accounts, joint venture, joint bank, co-venture. If it is not maintained, joint venture and co-venture. If only and only own transactions are recorded, only one account, joint venture with co-venture account. A and B purchased a piece of land for 40,000 and sold it for 90,000. Originally A had contributed 24 and B had contributed 16,000. The profit on venture will be. It is the goods of 40,000 sold for 90,000. So the difference is 50,000. Option number A will be correct. Memorandum joint venture account is a nominal account because find it help to find out profit or loss in case of co-venture recording only own transactions. Which of the following statement is true? There is no difference between joint venture and partners. Consignment and joint venture is same. There is no separate act for joint venture. Option number C. True, not false. Now I will be telling how to prepare a joint venture account. A JV account will be consisting of to purchase, buy sales, buy goods taken over, unsold, to expenses, to profit will be a balancing figure. So you have to remember this format. It is a trading P&L format. Purchase, sales, taken over, expenses, profit or loss. A formed a joint venture with B. Purchase goods costing 2 lakh. Purchase goods costing 2 lakh. So joint venture. Purchase goods costing 2 lakhs. B sold 80% of the goods. By sale 2,50,000. Balance of the goods were taken over by B at cost less 25%. So 80% by taken over. Firstly 2 lakh 80% minus 25%. 1,20,000. Oh, sorry. Remaining goods will be 20%, no? So 20%. 2 lakh 20% minus 25%. 30,000. So over here, calculate the profit or loss. So 2,80,000 over here and 80 over here. Profit. Which figure? Balancing figure. Option number A will be correct. Profit will be 80,000. Same question. A and B purchased the goods of 40,000 and sold it for 90,000. The profit will be 50,000. Memorandum joint venture nominal account. If a co-venturer takes away the goods under memorandum joint venture account, he will be debit the goods to purchase account. Now only because it is a purchase account debit to what? Purchase account debit, because he has taken the goods for his personal use. Purchase account debit to joint venture with co-venturer. If the unsold goods costing 50,000 is taken over by the venture as 37,500, it will be credited by 37,500. Goods costing 10,000 destroyed by an accident, insurance claim nil. No entry will be made in the books of joint venture. If a co-venturer takes away the goods under memorandum joint venture method, then he will be debiting which account? Purchase account. Repeat हुआ question. Which of the following accounts are to be maintained in the joint venture when separate set of books of accounts are maintained? Joint bank, joint venture, co-venture. Answer will be all of the above. Joint bank is a which account? Personal account. What is the nature with joint venture with personal co-venture account? Personal account. If co-venturer takes away the goods, he will be debiting purchase. Repeat. Nice question. Important question. P and Q are partners sharing profit and losses in the proportion 2:1. In the joint venture, P gives the accounts of joint venture. Q gave rupees 5,000 to P for joint venture. Q prepared the accounts and show the profit of 2,250. P settled Q's account in the books of Q. Rupees dash profit is credited to 2,250. PQ 2:1. So 2,250 divided by 3 into 1. That will be 750. So the profit share will be 750. Option number A. Which of these accounts are not open? Joint bank, joint venture, co-venture is open. Answer will be stock reserve. A and B entered into joint venture. A gives 85,000 to B. To which account this transaction will be recorded in the books of A? In the books of A, B account. If the unsold goods of costing 20,000 were taken over by the co-venture at cost less 25%. So 20,000 less 25%. So it will be amount of 15,000. 20,000 less 15%. 20,000 less 25%. Joint bank is a personal account. Profit is the credit balance. Just balancing figure, debit side, but is a balance of credit nature. Yes, true. Co-venture is a nominal account. False. Which of this is not a feature of joint venture? Continuing business, no firm name partners are called partnership for continuing business because it is a limited duration partnership. Memorandum joint venture is a nominal account. Profit or loss on the business is shared by the co-venturers in the agreed ratio. If the co-venture takes away the goods, he will be debiting which account? Purchase account. What is the nature of joint venture with co-venture account? Personal account. Which of the following accounts are maintained in the joint venture when separate set of books are maintained? All of the above. Co-venturers and co-partners are interchangeable terms. False. C and D enter into a joint venture. D gives rupees 50,000 to C. To which account this transaction will be recorded in the books of D? C account. Finish. We have also done with the MCQs of joint venture, and over here I declare that I have completed the topic of joint venture. Already 30 MCQs have been done. Total 372 MCQs till now has been covered. Each and everyone has to practice it and do not miss it. It will be very beneficial to you all to clear the exams. So here I have completed the topic of what? Joint venture also. It is a simple topic. It is a short topic. In the first 40 minutes, in first 35-40 minutes I have explained the all concepts, and in the next 10-15 minutes I have done with the 30 MCQs. So over here the topic of JV is done. So till then everybody keep studying. All the best for your exams, and do share the video, and also the WhatsApp community link is available in the description box. Do join the same. Bye bye, take care.